Hi and welcome to today's morning report on Monday the 20th of July with me, Rich Perry, market analyst at Tech Markets. European trading session has got off to a fairly stable and decent start actually. A little bit of a bounce at the open. You've got market sentiment that's fairly well settled down now. You've got the Greek banks that are opening today again, although they are giving out 420 euros for a week to anyone who looks to withdraw money, but the capital controls remain in place. I mean, if you actually look at it, 420 is no different to 7 days worth of 60. So no real change there, just the matter of convenience really, rather than having to queue up all day long. They can get the money out in one go. So no real improvement there in terms of what you can withdraw in Greece, but still markets have taken it fairly positively. The German bond yields are higher. Well, I say higher, very, very slightly, pretty much stable actually. Spanish, which I take as a bit of a sort of reference for the peripheral Eurozone yields, fairly stable as well. So not a great deal of movement around the markets today. Forex markets are basically stable, a little bit higher on euro, a little bit lower on sterling. Interesting that we've got quite a strong rebound on the Kiwi actually, and that's come on the back of comments from the New Zealand Prime Minister that the economy was growing at a fairly strong rate, and also that the Kiwi had fallen faster than expected. So a little bit of a rebound there on the Kiwi today, up around at 0.9% against the dollar at the moment. So just have an eye on that one. But other than that, the big news would be the fact that the gold price has absolutely just fallen, well, initially off a cliff in terms of it around about 2 o'clock in the morning UK time, which is sort of around the open in China, apparently. The gold price fell about $45 in about 1 minute. And that sort of come as sort of news came out, was filtering through that the Chinese have not been building up their reserves as fast as perhaps the market had been anticipating, and the gold price absolutely tanked its way through the massive support of 1131, which was in place for that November low. That absolutely destroyed it, but I'll talk about how that's impacted the technicals in my chart analysis in a bit. But certainly that is big news there, and it's affecting across the precious metals space as well. There's no economic data out today, so markets will be trading on these technicals, and seem to be fairly settled as we move through the European trading session. Now to my chart of the day, which is the Swiss franc. Now we saw, I talked about Swiss franc, I think it was last Monday actually, and I was talking about the prospect of it breaking higher, breaking through that 95.45 key resistance. And it's now been done that, and you had a closeout above that level on Thursday, and then an entire trading day above that on Friday to confirm the move. And what we also saw on Friday was a little bit of a near-term sort of correction back towards that breakout. Old resistance becomes new support, finding support on that old level, and then moving higher once again. So that's a pretty strong sign. Looking across the momentum indicators as well, the RSI is now above 60. Every time in the last few weeks, or even couple of months really, gets towards 60, it's sort of fallen away, and so that sort of suggests that the bulls are gathering momentum as well. The stochastics are strong, the MACD lines are also at a 3-month high, so decent looking momentum indicators pretty much across the board there. So it be certainly looking to buy into any sort of intraday weakness, I think. And this is again a strong chart. This is the hourly. You've seen this breakout. That was the 95.45 level. Where am I looking? There you go. 95.45, and then breaking out and using that move on Friday as a breakout support. So I'd say anything that sort of unwinds back towards that neckline again, I think is a chance to buy. Looking at these momentum indicators on the hourly chart, again nice and strong. So it certainly looks like the bulls are in control of this one for the time being. Anyway, it looks like next resistance comes in at 97.18. And as I said, nicely using any little intraday dips as a chance to buy, but it certainly looks like it's going to be pushing higher on the Kiwi. Sorry, dollar yet. God, I don't even know my pairs. Dollar Swissy. Right, so I wish you good luck in your trading today, and I'll speak to you later, I think.